Hello everyone. Welcome to another live stream. So this is a bit of a different format than my regular forecasts and trade recaps that I do basically every week. I want to make it a bit more interactive. I want to get your questions. I want to also cover some more pairs since I'm only trading 6 currency pairs, which are going to be on this list. Okay, so this is my live trading watch list, 6 currency pairs, but I also like to analyze these ones as well. So gold, silver, S&P, NASDAQ, Bitcoin, Ethereum, dollar index, and US oil. The big ones, and always good to analyze those alongside the regular Forex pairs. So if you have any questions, make sure you put them in the chat and we will get through any requests that you have, any questions about trading psychology, how to become profitable. So yeah, if you have any questions, what's up, Arsene? Hello. So yeah, I'll keep my eye on the chat. Until there are some questions, I will be doing my classic analysis of the 6 Forex pairs, and then we're going to go over the bigger ones. So we do have Fed Chair Powell testifying today, I believe. Let me just check. If we go to Forex calendar and we look at Wednesday, yeah, so he spoke already. Okay, so that kind of passed. Looks like the impact on the markets was not really that massive. We're going to see the other dollar pairs, but yeah, I'm not seeing much activity from that. Yeah, definitely some low activity. Okay, the pound made a bit of a move, but other than that, it's pretty quiet. And this is kind of normal to see before a big move. Okay, so yes, the markets are currently very flat, corrective, and range bound. But it is kind of likely for us to get a big move to the upside or to the downside. Usually when there's a long consolidation, you can expect a nice trend to start out of the consolidation. So also let me check that I take any trades. Let me go to my trade journal in Notion, live trade journal. No, basically last trade was on the Aussie Japanese yen. It was a flag and it was on Wednesday. Yeah, I think I didn't cover it in the last stream, so we're gonna put it in. It was an interesting one. It was right here, 12 pip stop loss. Yeah, we're gonna come to that definitely. So on the euro and the US dollar, what am I seeing currently? Well, in the pair price action, I didn't see much, but now I'm starting to see a clear pattern print. Now I trade some simple, clean patterns such as ascending and descending channels. As you can see right here, I can spot a clean descending channel, right? Why? Well, because the price is consecutively breaking the lows. 1, 2, 3, 4, 5 times we broke the low and retraced. That is a clean ascending, all right? And that is giving me an indication that the market wants to go up. So I would not be surprised if something like this happens. If we start an uptrend, then I'll look for buy setups. So if you go and back test what happens after clean descending channels, usually an uptrend occurs. We did not get the reaction I wanted. We kind of broke the high correctively. So that is not really the best scenario, but still we can get some momentum going up like this. And that is my forecast for the euro and the US dollar. I want to see that strong push up and then a nice flag setup or a nice pullback break and retest of the high. Okay, so that is the goal for the euro and the US dollar. Is it on the watch list? It was, because the descending was clean. I like the descending formation, but now I'm not kind of seeing the reaction I wanted. I'm not seeing the big impulse up. So I'm going to be a bit more patient on the euro and the US dollar. I'm not going to put it on the watch list. EJ, euro Japanese yen. So this one was pretty flat in the pair price action. Pretty flat right here, very corrective. And now we're starting to see an ascending channel. So after an ascending channel, I do expect a downtrend to start. So my eyes will be on this pair to see if this formation can maybe reverse to the downside. Okay, like this. Hey Nico, what's up? So yeah, on EJ, I want to see the ascending clean up a little bit. Just show Nico's comment. And then I will look for basically shorts. Of course, I need the confirmation. I need the large bearish candle, large momentum, and then for a sell setup to form. So that's it for EJ. You know what? I'm actually going to put EJ on the watch list because I'm seeing a bit of potential with the euro and the Japanese yen. Aussie US dollar is really flat. This pair is really, really flat to really corrective. I do trade a range bound entry called the liquidity sweep on the Aussie and US dollar. So basically what I want to see what will happen in these areas. Above the high, below the low, these are the areas that are significant to me and that I'm looking at for shorts or for longs, all right? So what do I want to see? I want to see price correctively reach the upper liquidity area and reject, and then I look for a sell. Or I want to see price potentially range around a bit more, push into the lower area, reject, and then I look for buy setups. I have my alerts set, right, on this high and on this low as well, and then I will look for reactions in these areas. So that's it for the Aussie and the US dollar. Definitely looking for liquidity sweeps. I am going to put it on the watch list. It is very flat and range bound, but again, on this currency pair, I am trading the liquidity sweeps, so I will be very interested to see what happens in those areas. I'm also trading the liquidity sweep on the euro and the US dollar, but I'm not really seeing that flat price action as I'm seeing on the Aussie US dollar. So Aussie US dollar looks a bit cleaner for liquidity sweeps. That is why it is currently on the watch list. For the trending entries, I would need to see just a large push up or a large push down and then a sell setup. So just large momentum up or large momentum down. AJ is moving. I did take this flag. I think it was right after the live stream last week, okay, because the live stream was at around this candle, and then we did get an actual entry as well. So just by looking at this entry, I was a bit concerned because there was a flag, but we saw some strong selling pressure in this candle right here, okay? We saw some strong selling pressure in this candle, which was a warning sign. It's kind of a bigger warning sign as well. I do not like taking these larger flags. I do like to take them on maybe the euro pairs like the euro US dollar and the euro Japanese yen. So for example, if it was kind of bigger, but on Aussie US dollar, Aussie JPY, NJ, New Zealand JPY, I do not really prefer these larger flags. So that is the reason why I did not like the formation. I did still take the trade because if you zoom out, it was definitely trending up. So it was in a very, very strong uptrend, the Aussie JPY, very, very strong uptrend, and it looked really, really nicely, really, really nice. When you see such a strong uptrend that is very long, you can even bump it up. I trade only on the 1 hour chart. I analyze only the 1 hour chart, but if you bump it up to the, let's say, 4 hour, you can even go to the daily. It's gonna look massive, okay? So yeah, this looks absolutely massive with a lot of momentum, and you definitely want to exploit this price action. So when you see a strong trend and a big trend is this one, you can definitely tolerate some warning signs, such as a big shift in the actual flag. It was a loss, unfortunately, but it still definitely fit the plan. And then we were just very, very flat and range bound, as you can see right here. Okay. So very, very flat. Nothing much was happening. We did not get the conviction going to the upside. Okay, unfortunately. Instead, we just ranged around for, I would say it was a long time. It was from Wednesday all the way to Tuesday. So it was a big range. And then we started impulsing up. Was I looking for some buy setups here? Potentially I was, but nothing really formed. Hello, Tom. What's up? Great to have you join. So we're seeing some familiar faces. That's always nice. I always think you're crypto, not crypto Nick, but trader Nick. So you have a similar name and a similar picture as well. So basically, no flag setups formed here. The break of the high was not big enough for me. For a continuation, I would have liked to see a much more convincing break as this one. And then we basically continued up with not a lot of momentum. We were kind of printing wicks. Blush. So my Instagram is Marcos Trading Journey. Basically, let me just check. Let me check what's my handle. Okay, yeah. So I'll put it in the comments. Okay, it should print right now. I also post like a reel every, I think it's Tuesday, and no, it's Monday and Thursday, and I go over some price action. I give some advice for traders as well. So if you want to follow my Instagram, I highly recommend it. It is Marcos Trading Journey. And if you want to learn to trade, definitely join zentumtrading.com. Okay, so definitely go ahead and look at that website. Proceeding with the Aussie JPY, currently showing momentum. So looks like momentum started to clean up a bit. This was ascending for me. So what I'm actually looking at right now is possibly an internal reversal entry. Okay. What is that? Well, it is an entry that we teach at Zentum Trading. Let me just open the comments. And the simplest explanation is that it has three parts. It has an ascending, it has a push up, and then a big shift in momentum. Okay, so if all three of these criteria are fulfilled, then you have an internal reversal entry. This is looking nice. This is looking clean. Definitely has some potential for the internal reversal. Let's see if this momentum can continue a little bit. And there are a couple of scenarios for me. So if the momentum does continue strongly and then we get a nice big red candle, I'll look to sell. I'll look to get in on the internal reversal entry. It would definitely fit the plan. I mean, the ascending is pretty clean. It's pretty tight, exactly how I like it. And the impulse has potential to be a nice large impulse. So I'm seeing some potential with AJ. I just must write it down because I tend to forget. That I'm looking for internal reversals because it's a new entry and I just get distracted. So it's better to write down. Next scenario that I'm looking for is if this does continue up but does not shift to the downside, well, then I will look for buy setups. Of course, if I get a clean flag or a clean break and retest with no selling pressure, because it's definitely moving up overall. I mean, it's very easy to make that conclusion, right? Overall, it is in a huge uptrend. So yeah, there's definitely a bias for this to continue up as long as we don't get any selling pressure. So two scenarios. First one is an internal reversal with an ascending channel and then a final fake out before the market reverses in the opposite direction. Or for this to print some momentum and then a nice buy setup like this. Okay, Timothy, what do you think about today's NJ? So New Zealand JPY, we'll definitely get to it. It is coming right after the pound. Okay, so it is coming very soon. AJ is done. Took a 1% loss. Currently looking for some setups. We have some clean patterns forming in the markets, so that is definitely interesting. Yeah, no worries. Timothy will definitely cover it. Pound. So it was moving. Last Wednesday was here. We had some movement. We had a gap in the markets as well, right here. And then we had a nice V reversal. So a nice V reversal. And I was looking for that V reversal sell pattern. So this is a pattern that some people call the cup and handle. Some people call the inverse, or actually the head and shoulders. At Zentum Trading, we call it the V range push down sell. Okay, so you can call it V in a range, you can call it cup handle, or you can call it even left shoulder, head, and right shoulder, right? So many names, but it all signals a drop in price action. I'm just gonna go grab a glass of water. I'll be back. I always forget the glass of water. Okay. It didn't happen. We never got the signature. We never got the big bearish drop that I was looking for. So I was looking for some big bearish momentum to print. I was looking for something like this to happen. And then for a nice clean flag or a nice pullback break of the low retest. So for a sell setup after some strong bearish pressure, that never happened. Instead, price broke the high and now is starting to print a bit of momentum. So this is done. No longer on my radar. It's no longer active. It's no longer a valid V reversal and range pattern. So we're moving on. Currently, I'm not going to be putting the pound US dollar on the watch list. It looks pretty flat, pretty corrective and range bound. So I'm being more patient. Maybe this momentum can continue. Okay. So maybe we can get something like this and then a buy setup, a flag, or a break and retest. But I want to see it continue. I want to see the momentum clearly push up a lot more. That's it for the pound. NJ, okay. Let's see. So the buy on NJ, today's at midnight, around midnight. Okay, so I'm guessing it's possibly here. I was definitely looking for a flag. I had my eyes on this price action. Yes, overall price action was a bit flat, corrective, and range bound. All right, that was true, but I did see a bit of momentum form, and it was end of Tuesday. Mondays and Tuesdays, I'm a lot more patient, but Wednesdays, Thursdays, Fridays, I tend to be a bit more active in the markets, let's say. So I was starting to see a bit of bullish momentum print, and I was looking for a potential flag right here. Unfortunately, the flag never formed. Okay, the flag never formed because the NG candle, I think this was lower than this low. So a flag looks like this. You need the first high, first low, second high, second low. All right, and here you have the first high, first low, second high. Is this the second low? Let me check. 721, 723. It is. So this is the second low, and now we need the final piece of the puzzle, which is a bullish candle that stays inside of the high and the low. This is the high level. This is the low level. I need the entry candle to be inside of the high and the low, and it never happened. This candle broke the high. If this candle was inside of the high and low, maybe I would have taken this trade. Maybe. Again, price action was pretty bad. Price action was pretty crappy. So I'm not really 100% sure. But I did definitely have my eyes on this. So Timothy, unfortunately, spread hours broke the high. Otherwise, I would have taken it. Oh, so you didn't take any trades in the end? Or did you take some sort of a buy setup a bit later? Did you have your order on for a buy limit at this point? Something like this? No? Okay, cool. So you were looking at the flag, I'm guessing. You were looking at this entry right here. Ah, okay, flag, cool, yeah. Unfortunately, yeah, it was invalid. Or maybe it was fortunately, because if we bought here, let's say this candle didn't break the high, if we bought, we would be running profit at one point. We'll be running some nice profit, like 2%, but then we would get taken out for a reduced risk loss, because when the price breaks the high, we move our stop loss 2 pips below the most recent low. So yeah, it would be like a reduced risk loss, and good that we follow the plan. Yeah, save the big loss. So you think this was like a Bank of Japan intervention? I'm not sure. I do not follow the news that closely, but maybe there was some news with the Bank of Japan. Other JPY pairs did not really have a reaction, right? Other JPY pairs did not really move that much. Let me see, EJ, what is it doing? Broke the high, retraced. Yes, BOJ intervention. Okay, it's definitely a huge candle. It's definitely a news candle. I mean, just by visually assessing it, right? It's absolutely massive, absolutely huge, bigger than anything else in the prior price action. And that's how you know you have a, that's how you know you basically have a news candle. What do I like to see after news candles? Well, I like to see price immediately continue with the momentum. So for example, this was a big red one. And either the price will continue with the momentum immediately, or it will start to range around a little bit, break the low, retrace. In that case, you're just going to see a range. Okay, so it's all about the probabilities. If you backtest news candles, you will see you want the momentum to continue almost immediately. If it does, then you can look for some nice sell setups. Or if it's a bullish scenario like this, then you look for buy setups. But just remember, after a news candle, you want the momentum to immediately print. Yeah, basically that's it. Going back to it, of course. Social scientist, what is your win rate and risk to reward? So depending on the entry, my win rate for the trending entries is around, I think, 30 to 40%. More 30, okay, more on the lower side. Average risk to reward for the trending entries is gonna be, last time I calculated it was around 7 or 8. So my winners were on average 7 times bigger or 8 times bigger than my losses. I have to recalculate it because that was a couple of months ago. But again, around 30% win rate, and I would say 7 basically risk to reward. So the winners are 7 times bigger than the losses. For the range bound entries and for the internal reversal entry, I would say the win rate is around 45-50%, and the risk to reward is 1 to 3 on some entries and 1 to 2 on some other entries. Also, the difference is for the trending entries, I use a trailing stop loss, while for the range bound entries and the internal reversal, I use a fixed take profit. Usually with a fixed take profit and with that sort of approach, you get a higher win rate but less profits. And one of the reasons why I employ such a strategy is because I want to smooth out my equity curve. Okay, what do I mean? Well, look, most of the percentage that I make, most of the big percentage comes from trending entries. But usually you can have some big drawdowns as well, right? So my equity curve can have sometimes big swings. So by implementing, let's say, range bound entries and the internal reversal, that have a higher win rate, you can make the drawdown periods a bit smaller. Whoop. Not just that, but you're gonna finish up with even more percentage because the new entries are also net positive, right? So the drawdown periods will be better. They will be easier to handle, and you will end up with more percentage at the end of the year as well. But the psychological impact is, I would say, an even better thing than the actual percentage, because being in drawdown for a long time and for consecutive weeks, maybe even consecutive months, which can happen with the trending entries. Markets do not trend every week or every month. Basically, drawdowns can be tough, and they can make you overtrade, take shitty setups, force trades, over risk, and just do some stupid shit. So basically, that is why it's good to employ trending entries and range bound entries as well. Nico, yeah, thank you, Nico. Connor, what's up, Connor? Hi, Marco. Are you interested in any liquidity entries on the Aussie US dollar? Okay, let me see. Yeah, definitely. I have my alerts set. So my alerts are set right here on this high and on this low as well. I'm gonna be looking at what happens in these areas. So basically, just a quick methodology behind the liquidity sweep. You want to find the range, a really flat one like this, not a lot of movement, low volatility as well. You want to identify the high, the highest high and the lowest low of the last, let's say, 3 to 5 days of price action. For me, that's this level, and that is this level right here. And then I want to see price correctively reach those areas, push into them, capture the liquidity, and then reject, and then I sell. Okay, like this. Or same thing in the opposite direction. Maybe price can range around, break the low, reject, look for buys, like this. Right. So that is the game plan for the liquidity sweep. That is what I'm looking for on the Aussie and the US dollar. And this currency pair is on the watch list as well, because the range is looking pretty corrective and pretty flat. So I think we covered. And also liquidity. Why is there liquidity above this high, for example? Well, you have a lot of people selling on these big red candles. Where would they put their stop loss? If you were a trader who sold here or sold here, most likely you're going to put your stop loss above this high, especially if you're just starting out. Most of the courses online are being taught to put their stop loss above the high or below the low. So this area is going to be significant. And then also you have the traders on the lower time frames probably battling it out and kind of selling the tops of this range, buying the bottom of this range, maybe on, let's say, the 5-minute, right? See, maybe selling these tops, buying these lows, maybe putting their stop loss all the way to here. Who knows? But it definitely makes this area more significant, right? This area is definitely going to be more significant because of that. And what you're going to find if you do some backtesting, this is a major high. It's very significant, even on the 4-hour. On the daily, let's see. Not really, but on the 4-hour traders, 4-hour traders are definitely looking at this high and what will happen when we break it. If you get weakness, most likely price is going to drop down. And on the 1-hour, same thing. So it is a significant level. If the price goes into it, rejects, shows some weakness, well, then definitely we can look for sells, because there is a high chance that the price will go maybe all the way to the bottom of the range. So that's it for the sweep. Now let's cover some other instruments. For example, gold. That gold is the first one on my list. And if you have any requests, guys, just put them in the chat. We can do anything. We can do Forex, we can do stocks, we can do indices, oil. We're going to do oil either way. But yeah, any ticker that you have, we can take a look at it. I basically do my analysis on the 1 hour chart, purely technical, so no news and no indicators, just clean price action, clean charts. I'm a momentum trader and I'm a pure price action trader as well. Smile wants NASDAQ. Sure. Yeah. We're going to do NASDAQ. Yeah. It's definitely on there. So for these instruments, I also do the 1 hour, 4 hour, and the daily, because most of them tend to be very range bound sometimes. So the 1 hour does not paint the whole story. And just to make things a bit more interesting, I'm going to bump it up to the higher time frames as well. For example, here, gold is pretty flat. On this 1 hour chart, it's pretty flat. We did see some momentum here, but it could not be sustained. We got major selling pressure after that. So we're now kind of stuck in this area. 4 hour also stuck in this area. You could even be looking for a liquidity sweep. So this is exactly what I was talking about. Find the range, find the extremes of the range. So the upper liquidity and the lower liquidity as well. Look for the price to push into one of the liquidity areas, reject, and then basically you can sell on any of these candles. That would be a liquidity sweep. For example, you can sell on this one. Oh my God, you need a bigger stop loss. Let's say your stop loss is something like this. Maybe even above the high, aiming for a 3-to-1. That could be a play, aiming for the somewhere of the bottom of the range. 3-to-1 is usually a very good risk to reward. That is what I personally found in my back testing. 1-to-2 gives you a better win rate and is better on the psychology, but I like 3-to-1. It's a balance between the win rate and the percentage that you get at the end of the year. Daily is range bound. Daily is flat and range bound as well. What am I looking for gold? Well, I want to see this. This was really, really good. This was a really nice, really strong trending market. Look, there's a flag. Let me just point the flag out. First high, first low, second high, second low. Blue candle is the entry candle. Wow, this would be a big trade. So yeah, this is exactly what I look for in trending markets. Nice push up, very strong, and then a very clean flag setup like this. That's perfect. Okay. But now we're flat and range bound. So now my key levels for gold would be, I want to see price break this high, or I want to see price break this low with momentum. Depending on which one breaks and depending on if we get momentum, I would expect some larger trends. Right now, there's really no sense in calling the market because it's looking very, very flat. That's it for gold. We're going to do NASDAQ since that was the request. We have possibly an uptrend. Let's see. Whoa, NASDAQ is looking pretty nice, pretty good. Well, we even had a really nice flag here form. What I'm currently doing is I'm backtesting. I backtested gold with my trending entries. I got some nice results, but the edge was not as big as on the Forex pairs. But I'm also doing the S&P 500, which also got some good results, a bit more consistent than gold. So it definitely has some potential. My main goal is to kind of fill out the quieter markets in Forex. So sometimes Forex markets can be a bit quieter, but the stock market may be active. For example, this flag, first high, first low, second high, second low, right? Very clean flag. Very nice entry candle. Let's see, 15 pip stop loss. No, that's too small. Should probably do 20, maybe even more, maybe 25. Let's do 30. Yeah, that visually looks good. I usually visually assess the stop loss and I would get taken out somewhere here. So this would be like a 6.8% trade, which is very, very nice. Again, the date of this is 4th of July, 2024. And at that point, None of the Forex pairs were really moving. Maybe JPY pairs, but they were looking a bit corrective. So if I can balance things out and get in on some nice trends while the Forex market is a bit sleepy, well, then I can make some good percentage. So that is definitely a goal, and that is definitely the reason why I'm researching the S&P 500 and backtesting that. I also have to do NASDAQ, I'm not gonna lie. This looks pretty nice. These legs are perfect. If you're seeing legs like this, it's a very good story that the markets will continue trending up. So Smile, very good catch, and thank you for the recommendation. This looks very clean. On the top, maybe slowing down a little bit. Again, we're not seeing these legs anymore, right? We're starting to maybe print an ascending channel, but with the stock market, it's a bit different. These trends can really like push for a long time. I mean, the S&P has been in an uptrend for the last, 30, 40 years, maybe even longer. So it's just a constant uptrend. And I do not really want to be taking reversals out of ascending channels. I want to be more careful. So my main goal with these types of instruments, like the stock instruments, the stock indices, is to look for buy setups. I'm not going to lie. The bias is with you. The big picture is with you. I mean, if you go to the 4-hour, very bullish. There's even a flag on the 4-hour. First high, first low, second high, second low. Blue candle is the entry candle. Very bullish. Now, if we bump it up to the daily, just a constant uptrend. I mean, just probabilities are with you. If you're a buyer in this market, if you see some nice impulses, some nice clean entry setups, okay, some nice flags, some nice break and retests, probabilities are definitely with you for the price to continue up, because we're just in a huge uptrend. That is what I find very, very interesting with the stock indices. So I would be a buyer in this market if I was trading it live. Definitely a buyer. I would have bought right here on this flag, on this as well. This one is a nice flag as well. So that's it for NASDAQ. I want to do Bitcoin because we had a very significant drop all the way to 5,300. Okay. 4 hours currently starting to flatten out a bit, be a bit range bound. 4 hours, same story, starting to flatten out a little bit. But on the larger picture, it was definitely a big drop. We had a big drop on Bitcoin. Maybe the daily will be a bit better. Yeah, the daily looks better. So all the way from 7,100 to 5,300, right? Almost hit this support level. Let me see in percentage. 25%, minus 25% in just a couple of hours, maybe 2 or 3 days. So that is interesting to see. That is very, very interesting. Again, I thought when we broke this level that we were just going to be dropping down, that there is going to be a big panic sell-off. That didn't happen. So again, no one really knows with Bitcoin. It doesn't like fundamentals. The technicals don't really work on it either. I know trader Nick told me that it kind of moves in tandem with the stock market. So when the stock market is bullish, because the Bitcoin is a risk on assets. So you have risk on assets and you have risk off assets. Risk on assets are when the interest rates are low, when everyone has a lot of money, when everyone has a lot of cash, they want to buy something risky. So they buy stocks and they buy, for example, Bitcoin, right? So that is why they kind of move in tandem. When it's a risk on sentiment, people start buying Bitcoin. But I do not really know no one really knows what's going to happen next. And I do not really, I'm not really able to apply my technical analysis on Bitcoin, unfortunately, because it doesn't follow guidelines, right? It doesn't follow the regular technical analysis, even momentum guidelines. I would say if we get a big drop here, if we get a big red candle on the daily with a clean close, then I would say that we will get more downside. But then again, you can make a case that this is maybe like a big pullback, right? If we go to the monthly chart, this may be like a big pullback. So like maybe forming a flag. First high, first low, second high, second low, blue candle would be your entry candle. So again, no one really knows. I did say in some of the streams that I was looking for a break of this level, and if it breaks, it's going to be a big drop down. That didn't happen, so yeah. Monthly flag into 100K. Yeah, let me see. All the way to 100K? Possibly. We need a bullish close. So right now we have the first high, first low, second high, second low. Now we need the bullish candle to print. And then that would be the entry candle. That is the flag methodology. Maybe it can hit 100K. So we will see. Very, very interesting. To be honest, I was expecting the price to just crush holiday money. Yeah. I was expecting the price to just crush the high when it was here, but then it just dropped for some reason. But we're not getting those big drops. If you want to see big drops, if you want to see reasons to panic sell when the bigger players start panic selling, well, it's this leg, this leg, this leg, definitely this one. Oh my God. This leg, absolutely huge. So we're not seeing those big panic sell legs just yet. We're seeing some selling pressure, but it's not really that impulsive. That's it for Bitcoin. S&P. We need to do the S&P. Let's see the S&P. It was definitely in a nice uptrend on the 1 hour chart. Now starting to slow down just a little bit. How do I know that? Well, just by visually assessing the momentum. Oh, almost spilled the water all over the keyboard. But basically, breaking the highs and starting to show some slowdown, some weakness. Each time we break the high, there's not really a lot of momentum going through. We're kind of slowing down a little bit. So that's not really a good sign. In the price action, we did have some nice bullish legs. Same as NASDAQ, to be honest. Big one here, here, here as well. That was very, very bullish. But the slowdown is definitely showing. Is it a concern on the S&P? Not really. It's not the same as with Forex pairs. So the S&P can just keep trucking for a really long time. Especially with the election coming up. Usually what you're going to get is the current president right before the US election is going to pump up the stock market. So they're going to put in a lot of money to pump up the stock market, because then they can say right before the election, oh, look, we did this, this, and this with the economy, blah, 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 blah. So that's why right before an election year, or right before the election month, which is, I think, November, you see a big uptrend on the S&P. I would not be surprised if that is going to be the case right here as well. Timothy, what's the stop loss size? I'm testing 15 pips, okay? For example, there was a flag entry here. I remember taking it in back testing and I used 15. It's kind of big, but I did the last 3 years. So I did 2021, 22, 23, and 24. In some of the years, it looked much smaller than this, but I want to use a consistent stop loss size. I do not want to switch it up too much because it just makes things more simple and it proves your edge better, okay? Because you never know how you would visually assess the stop loss size, and you're probably going to have a big bias to make the stop loss size as small as you can in your backtesting. That is the reason why I would just stick to a fixed 15 pip stop loss, especially for your initial run on the 1 hour chart. On other time frames, may have to be smaller or bigger depending on the price action. 4 hour, yeah, slowing down. I mean, it's now printing a really clean ascending channel. We have 1, 2, 3, 4. Okay, we broke the low here, but basically, this is what I love to see in Forex, because most of the time these formations start to print a very strong downtrend, and then you can look for sells. That is what happens most of the time in the Forex market. Now, again, stock market, it's a bit different. It can just keep trucking indefinitely. So I would not really be shorting this market. Am I seeing large selling pressure? No, I'm not. I'm not seeing big sell legs. I'm not seeing this. This is a cause for a concern. This here as well. That kind of momentum I do not want to see. Daily, I think it's going to be daily, just a no-brainer buy. It just looks absolutely bullish, extremely bullish. No sign of stopping either. Just by looking at the legs. Right. So yeah, very, very bullish on the S&P 500. And it's nice to see. We want trends. We like trends. I do not really like range-bound markets. Yes, I do have entries for the range-bound markets, but I personally prefer the trending entries. I prefer the trending markets. They're more exciting. And it's a bigger trail because you have a trailing stop loss and you don't have a fixed take profit. So you never know how much percentage a trade will make. Now, it's not good to bring those emotions into trading, but I'm just going to admit that the trending markets are more fun. Again, do not do trading if it's not at least a little bit of fun for you. If it's not fun, if it's really boring, you're not going to be motivated to do all the back testing needed. So it needs to be fun. It needs to be emotionally compelling. Okay. Then what did we skip? Silver. Flat on the 1 hour, really range bound. 4 hour, same story, not really moving anywhere. I think the daily is going to look the same. Yeah, it looks pretty similar to gold. Pretty similar to gold. At this point, yes, I was interested in potentially some buy setups, right? Because we had a really, I would say, a bullish scenario in this leg and this one. But unfortunately, it could not commit. Instead, just started to range around between the low and the high. So I would expect, to be honest, I would expect more range-bound price action right here. So that's about it for silver. I think we have the DXY and oil. DXY, range-bound, the 1 hour, 4 hour, not really seeing commitment. Daily, yeah, very range bound, stuck between the low and the high. So can't really tell, can't really pick a direction. You can definitely see a difference between this, which is range bound, and the S&P, which is trending, right? There's a big difference. I know a lot of people ask me, so what's the difference between a range and a trend? This price action is trending. This one is very, very range bound. And we have oil to top it up. Let me see. Whoa. Actually printing a clean descending channel. I haven't really backtested oil, so I do not know if it moves more like Forex or if it moves more like indices like the S&P. But in Forex, when you see a descending channel like this one, so a descending channel that is as clean as this one, you definitely can expect a uptrend. Okay, most of the time you're going to get a nice uptrend after a descending channel such as this one. So I'll not be surprised that that happens here. It's looking pretty clean. Why? Well, because I'm looking at the lows, and the lows are mostly being broken correctively. Price is breaking into them and retracing, which is a sign of weakness, and it's a sign that the markets could potentially reverse to the upside. So that is it for US oil on the 1 hour. 4 hour, not really clean price action. Daily, yeah, not clean either. Overall in an uptrend, I would say right here. So maybe this is just a pullback. Who knows? That is why we're printing a clean descending on the 1 hour. Maybe the markets are preparing to go up. And what is the methodology behind the descending channel? Well, it's kind of attracting retail buyers right? Because retail traders are trying to catch a reversal. So they're trying to catch a reversal all the way to the downside. Whoop. All the way to the downside like this. So these areas are filled with stop losses. There's a lot of stop losses below the lows, right? Below these lows, there are a lot of stop losses and a lot of liquidity is being grabbed. So underneath these areas, maybe here, some people bought. So this area is going to be active, gets taken out, retrace. Here, some people are going to be buying. Whoop. They're going to be buying, putting their stop loss below the low, they get taken out. Maybe some people bought here as well, seeing like double wicks, huge double wicks, buy, they get taken out. So again, a lot of liquidity is being grabbed by the bigger players. And then when the big players are ready, possibly they start buying and pushing the markets up because now they have, let's say, filled their big positions with taking out all of the stop losses from the smaller players. So that is the methodology behind ascending and descending channels. To be honest, the methodology does not matter. What matters is that a ascending or descending channel pattern usually has a trend in the opposite direction after it. So if you go and backtest what happens after an ascending channel, clean one, you're gonna in most cases see this. And if you backtest what happens after a descending channel, in most cases, you're gonna see this. So again, methodology, what is the reason behind market mechanics, doesn't really matter if the pattern is there. It's the same story behind, let's say, a inverse head and shoulders. I mean, there's no like mechanics behind it, I would say, but it just works. The pattern just works. It's building up buying pressure, and then finally you get a breakout to the upside. And we know if you take, let's say, 100 of these setups after you see an inverse head and shoulders and you see a push up and you take 100 buy setups, 70% of them will go and make some profit and 30% of them will lose, right? So that's about it for all of the instruments. If you guys have any requests, any final questions, can be like a chart request, trading psychology, how to go from zero to consistently profitable, prop firms. We didn't have a lot of drama in the last couple of weeks, I would say. So maybe that's good because the prop firm space is stabilizing a little bit. Again, the ones I recommend are going to be FTMO and the 5%ers. I recommend Darwinex as well. I highly recommend for building a track record and attracting investors. So on Darwinex, you're basically running a small hedge fund, which is really good. And that's about it. Definitely stay away from the smaller prop firms, the newer prop firms, because there's a lot of shady and scammy people in the prop firm space and in the trading space in general. So if there are no more questions, we're gonna wrap up this stream. Thank you guys very much for watching. I will see you guys next Wednesday at the same time. So it's gonna be the 17th of July, and it's gonna be 4 p.m. or it's 3 p.m. London time. Okay, so see you there. Bring questions and good luck in the markets for this week.